Thanks.
السلام عليكم. Shall we start the session or shall we wait a few minutes?
I think now it's 10, 2:10. I think we should start.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good afternoon, everybody. I am Juma bin Abdullah Al-Khamisi. I am the Chief Finance Officer and the Investor Relations Officer of the company. I would like to thank all of you, and we would like to thank also Muscat Stock Exchange and the Financial Service Authority for organizing this session, so we can light a shade on our financial result for the first half of the year up to June 2024. I have with me in this session, which will be covered in English mostly, and we are open to answer any question in Arabic. So we will be covering this session with me, Mr. Tariq Sulaiman Farsi, our CEO, Mr. Rakesh Makkar, our Deputy CEO, Vikram Munga, GM Risk and Control, Sam bin Abdullah Al-Habsi, our Chief Operating Officer, Mr. Rad Kumar is the head, and Neroz, our financial analyst. So I may request everybody to put in mute, and we will open the session at the end of the presentation for question and answers. Mr. Farah, you want to open the session?
Thank you very much, Mr. Jum'a, for the introduction. We have continued basically our strong post-COVID performance with the loan, book growth almost 10% during the first half 2024 this year. This half has basically left us with the market share of more than 49%, which is about more than 2% than the start of the year. We successfully raised 35 million as a virtual bond, which was oversubscribed during the issuance, reflecting, of course, our investors' confidence in national finance. This inflow as well have basically helped us further strengthening our balance sheet and paved the way for us to increase borrowing by positively impacting our leverage. In this slide, our strategic investors and major shareholders have remained unchanged during 2024. We have grown from strength during the last 7 years, and since consistent acquisition, Oryx Leasing 2018, our synergy have continued to multiply. We have a monetization rate of almost about 21%. In this slide, as you see now, it's basically you can see the board of directors shared by Mr. Hani Zubair and his deputy, Mr. Aziz Al-Blushi. Our board is from a diverse background, as you all know, including banking, investments, advisory, and portfolio management. I'm supported by, of course, like Juma said, with my deputy CEO, Mr. Rakesh Makkar, as deputy CEO, and Juma Khamis is as well my CFO, and Vikram Munga is the GM of Risk and Control and Strategy. Slide, please. In this slide, as you can see, recent awards, and this year we got about 2 awards. Plus, we have opened 2 more branches in first half, whilst digitalization is the way forward. National finance has basically made us understand very the importance of physical presence in serving all the sectors of Omani economy. I think now I'll pass the slides to Juma.
Thank you. So as shown in the slides, we are the largest non-banking finance leasing sector in Oman. We have a market share of 49% as per June results. As the CEO said, we have more than 35 years of experience and track record. This slide shows how much the leasing market grown So the leasing market reached to 1.08 billion, with 5% growth in the sector. We are actually having a market share of 49% out of that market. In terms of profitability, we closed at 56% market share in the profitability with 5.9 million. In the bottom part of the slide, we are showing you the track records of National Finance since the inception. The remarkable milestone we have achieved in 2024 is having the second perpetual bond, as the CEO mentioned, 35 million. And we will give you a glimpse in the next slide on how that has been raised. So our perpetual bond, as it is already announced in the market, we have the exercise of raising the second perpetual bond after we have redeemed the first perpetual bond, which was in 2020. We was aiming to raise 25 million with a green show of 10 million. We have seen very good demand from the market, which is oversubscribed by 108. So we choose to exercise the green show of 10 million. So we have raised 35 million at a coupon rate at 7.75, which is already listed in the stock exchange in April 2024. This fund we have used for growing our book, and it will enhance our equity and our capital structure of National Finance to take National Finance to different horizons. Go to the next slide. The financials, as already been published in the stock exchange, we have grown our profits over the last year by 8.3. All our parameters was good during this year. Alhamdulillah, we see very good progress in terms of the booking of the business and the income from financings. Our operating income as well had grown by 11.3%, which take us to a result of 5.9 million. Compared to last year, it was 5.4 with 8.3% growth in the net profit line. Moving to the next slide. So this will give you a glimpse of how our portfolio has grown. As we already mentioned, our portfolio is growing year on year and very organic growth. Our gross growth across the years is 7.3. We have grown from the last year by 9.3%. In terms of the high quality book we have in the right hand side, our MBA is showing big growth after we have been struggling in the COVID-19 and the effect of COVID-19. We are actually strengthening our collection efforts, and also we are strengthening our books. So this is why our net MBA is declining, and this will be declined further as we go in our journey. In the bottom part of the slide, we are showing you the stable coverage growth in our book, which reached to 80% coverage. And also we show you the financial performance in terms of net income and net profit as well. Moving to the next slides. Next slides. Yeah, our funding mix has actually moved gradually as we have.
She's saying at least you got a chance to present today. Her case did not come.
Guys, can you please be on the mute?
Okay.
Your case, okay. Because our friend said, "Oh, this is withdrawn." You should say that. Yeah, he's saying withdrawn. Withdrawn as if it's never going to come.
No, withdrawn as in कि अपने end से withdraw किया. Was it has been pending with risk and will be presented in the next MSX.
You have to open the
final risk review to be finalized and CRO yet to be.
मेरे को नहीं कर रहे हैं.
I think Saket is like you.
अरे इसमें एक नया पंगा है.
Saket is like you.
Because he is waiting for her to amend it. Then she'll amend the risk coverage. This is what you should say. He'll amend it.
नहीं इसमें एक नया पंगा क्या है बता? तेरी चालू हो गया.
Okay.
Excuse me, guys. Can we have okay? So we managed to move to the speakers. So we will open the session after the end of the presentation for discussion. So in this slide, we are showing you how is our funding mix changed over the years. In 2024, we have introduced comes in our also funding mix. Our gearing is improving. It's declined a little bit to give us more room to grow during the range of the perpetual bond. Return on equity also has been shown very steady growth as we go. And our dividend payout is always strong dividend payout, which is almost 60% or more. So that shows how we are committed to pay very decent dividend to our shareholders. Our business focus, I will leave the floor to our Deputy CEO to cover the business focus in summary.
Hi, good afternoon, everybody. Just to quickly tell you that our objective is to service corporate, SME, and retail clients. On the corporate side, we offer vehicle financing, we offer equipment finance, working capital finance, and other warehouse financing options, including guarantee facility and debt factoring for our customers. On the retail finance, we offer new vehicle financing, used vehicle financing, and consumer durable financing. Our objective has been to grow the retail book, and on an incremental basis, we are booking almost 60 to 70% in retail finance. On the liability side, apart from the bank funding that we get, we also have corporate deposits, which is available to all the corporates across the country. And the good thing is that CBO has now allowed us to take minimum amount of 5,000 OMR as bare minimum deposit, and the tenure can go from 3 months to 60 months max. And given the requirement of customer, we tune this according to requirement of the customer. If he wants a payout in quarterly installments, or if he wants it in monthly, we are able to adjust that according to the need of the customer. Moving on to the next slide, we are focused on building a healthy book. If you see on the left-hand side, we have automated our processes of underwriting, and we continue to improve them as we learn further using the tools like machine learning. We have a strong process of checking cases which are coming through the door, and we also take corrective action immediately as soon as we pick up negative signals. This helps us to make sure that we are building a healthy book and we're not taking concentrated risk in any of the space. We have strong strategic ties because most of the business for us comes through dealerships. We have ties with both used and new car dealers. But from being partners with them, we do a lot of promotional schemes wherein different offers are given to customers when they are coming to buy a used car or a new car. The third pillar is digital leverage. Digitalization has become a DNA for our company, and we are constantly working on automation of all the processes across from the stage of loan origination to loan booking. We also are pioneer in working with different government authorities to make sure the strategy of government to digitalize processes is taken care of. For example, our tie-up with ROP on lien marking digitally, or our tie-up with banks on promoting direct debit facility for non-banking finance companies. In terms of other streams of income, we do almost 200,000 other income. We continue to build our focus on that, selling different products or services through our branch network. That's something that we are driving. And of course, we spoke about it. A branch network is a strength. We had 21 branches at the beginning of the year. We added 2 more branches, seeing the requirement in the market, and will continue to grow that. We have approximately 60,000 customers. We add almost 2,100 customers every month, and that gives us a big opportunity in terms of processing. So that's a quick snapshot on our multi-pronged approach. And now we are open to question and answers.
Well, thank you, Rakesh. Well, as I spoke in the beginning, basically our ability to source funding both domestically and regionally has meant that we have been able to grow above the market growth rates. The strengthening of our collection team as well during 2023 up to date, shown results, good results in this year, with our ability to curtail the NPA growth, which basically is the single biggest problem in the FLC sector, as you know. We expect a continuation for growth momentum into second half of 2024, and only anticipate further improvement going forward. Given our leadership position, we were able to adopt a cautious growth strategy, which basically will help us improve the quality of our loan book in the future. Thank you very much. If there's any questions, we'll be glad to hear them out. No?
Yes, we'll open the session for the discussions. So please, whoever has questions can start.
Hi, this is Amrit Sai from Ali Bank. Can I ask my question?
Yes, please.
Yes. So just wanted to know your view on how you see the NPL coverage ratio moving in the coming years and the NPL ratio moving. Do you think you'll be more aggressive in provisioning in the coming years till you reach, let's say, a coverage of 100%? Or do you think the kind of impairment you're charging to the P&L now is good enough and eventually you will build up to 100% with a declining NPL?
Yeah. So regarding the MBA coverage, actually, if we go back before COVID-19, the coverage rate was at 50 levels. However, the entire market after COVID-19 became very conservative, and we are actually not a part of that. So we have built our provisions. We believe our provisioning level is decent enough to cater any bad loans, which actually our going forward to keep it at this level or to increase it as well. So everybody is planning to increase it further, but we saw a lot of performance in the market. So the market is performing better. So we hope to increase the average by reducing our MBA. So back to your questions, reaching to 100% is always an ultimate target, but it's we don't think it would be achieved in the current market scenario. But we are willing to build up our provisioning as a strategy for national finance.
Sure. Thank you. And what would be your provision coverage in as of 2Q24? Is it 80%?
So actually, the aim of this session is not to forecast the future results as we had earlier discussed. So, but we are expecting it to be at the same level as we discussing now.
Sure. And what is your view on the NIM movement? Do you think it would be largely stable? There is expectation on rate cuts in the near future. So any view on interest rates?
Yeah, we see the interest rate is moderated, and earlier in the year we was expecting around 2 to 3 cuts during 2024. Till now, nothing happens, and we cannot forecast. Yeah, I mean, in this year there's a lot of thoughts. People thought that there will be one cuts, and most of the people say there will not be happening any cuts. However, we see the rates are reducing at a very good level. And especially for us as a national finance, after we issued our perpetual bond, we have a strength also to reduce the interest rate from the banks. We see the NIM is very healthy, and it will continue like this. Even it will go better by the end of the year. We are hoping to go better slightly. I hope I have answered your question.
Yes. Just one final thing, just to understand the accounting better. Can you tell me the exact numerator and denominator you have used for arriving at the NPL coverage ratio? What is the total reserve that you have used for the calculation? And what is the gross or net NPL number that you have used?
Actually, the gross number is the MBA to the gross portfolio, and the coverage is whatever is the accumulated ECL. Yeah, regarding the coverage is all the ECL, accumulated ECL we have built plus the impairment reserve, and the denominator is of course the infected portfolio. So it's similar to the entire financial sector.
Okay. Okay. That's it from me. Thank you.
Any other questions? Bashan, I think, was raised.
Hello.
No?
Hi, good afternoon, team. This is Bishan Bhalla from Vision Capital. Thank you for the presentation. Congratulations on a great set of numbers and the loan growth. Very encouraging to see that the leading player is leading the way. I have a few questions, but I'll build on what was asked previously, with regards to coverage ratio. And you mentioned that it would be challenging in this market to sort of take it towards 100. I know you've grown from 53% in 2019 to sort of 70% levels right now, if I'm not mistaken. Where I'm coming from on provision coverage ratio is, as per CBO, anything below 100% provision coverage ratio can pay out only a certain percentage of their profit as dividends. And you've maintained that at 60%, if I'm not mistaken. And if you meet the 100% provision coverage ratio, you can pay out 80% of profit as dividend. Is that understanding correct to start with?
I think it is not linked, yani, even though if you provide 100% coverage, that's still the dividend payout is 60% of the net profit. But I will double check that for you if you are specific. But what is
Sure.
we
I understand. And the reason I'm asking this question is because I'm building towards a very important metric for the parent company or sort of not the parent company, one of the largest shareholders, Om Invest. When we talk to them, we sort of, and this is what I'm going to ask you as well, is what is an aspirational ROE? And I believe, from Om Invest perspective, an aspirational ROE is close to the 15% mark. The moment you pay out a higher ratio, you have a smaller equity, and you've already shown us the profitability growth. So the numerator automatically is increasing organically. And with a smaller denominator, automatically you see an expansion. Now, I do understand a key driving factor would be interest rates, which you said, let's hope in all fairness, by next year we see some movement on that. It's anyone's guess. But sort of you'll get some comfort on those numbers as well as time goes by. So as a strategy, do you see a sort of aspiration to increase the ROE to the 14-15% mark? And what would be the key driving factors from your perspective to reach that level?
want to take this?
No, I'll start off by saying I think we cannot comment on Om Invest's aspirations. I think you're in the wrong meeting then. So what we can comment is what National Finance does and what we foresee. Again, we cannot make any futuristic statements here, but on how we are anticipating, I mean, Juma, you can add.
Yeah. So regarding return on equity, actually, we have the hope and we are working toward increasing return on equity by increasing our top line, by increasing our book. If you see our book is growing by 9%, which is outperform the markets, this will create a need for us. So our return on equity will move to double digits in the coming 1 or 2 years, inshallah.
Noted. Okay, that's fair. And I see the loan growth, 10% YTD, 20% YOY, very impressive. So
Yes.
do you sort of see a tangible evidence of the market improvement because of all the measures and the rating upgrades, etc.? Does that give you a lot of comfort? How do you see the economy? Because some of the players have not grown even close to the rate of growth that you've demonstrated. So that's very encouraging to see. But sort of, I see a disconnect between your growth rate and the market, and you've been exceptional in growing your book. So if you could just give us some comment on, I understand not about your peers, but in general, how you see the market, because I can clearly see a visible growth. So if you could just give us some insights as to that.
Yeah, actually, see, I don't want to comment to the peers' performance actually in this session, but actually we see very good growth in the markets, and we see a lot of opportunity we can build on our book in the market. We are actually optimistic about the market. We see the growth in the first half, and we see, and as we see the second half of the year, I don't see any restriction to grow at a similar level.
Okay, that's very encouraging to hear. Excellent. Next question would be in regards to the provisioning number that I've seen in this quarter, number that you uploaded. Is that a function of high recoveries? If you could just give us some flavor on the quarter-on-quarter provision, which came down from 1.076 million to 234,000 in this quarter. If you could just comment on that.
Yeah, actually, see, our provision is built by a solid and a robust model of ECL, which actually give us the indication of how the probability of default, and based on that, we are building our provision. We believe it is decent to cover any bad debts issues in the future. So we ensure that we have very good coverage, and also in top of that, we are building overlays as we see it necessary in our portfolio.
So what has changed in this one quarter that from 1.1 million your provision in the P&L has come down to 230,000?
Yeah, it's actually a portfolio performance. I cannot comment in nothing triggered as the customers, but this is how we are building our ECL model.
All right, and I understand you don't give future guidance, so it would be futile to ask you whether the Q1 number is more sort of reflective or the Q2 number is more reflective. So I understand that, but this number is net of recoveries, right? Just to understand from a reporting perspective, because there's no detailing on this in your notes. So I was just wondering if this number is net of recoveries, and just sort of if that could be a key driving factor.
If you compare the last quarter stage 3 portfolio versus this quarter stage 3 portfolio, there is around only 600,000 increase, 81.6 to 82 point something like that. So if this 600,000 increase we have already provided in this quarter, including the income suspense total ECL, we have provided more than 500,000. So it's almost 90% of the ECL has been provided compared to the quarterly increase in the stage 3 portfolio. That's what has been driving this small increase. And when it's compared with the first quarter, our stage 3 portfolio has been increased by almost close to 2 million. So for 2 million, we have provided around 1.5 million, including the income suspense. So this is the normal trend you can see when you compare the numbers.
Okay, right. And then just to confirm, you mentioned that you see enough buoyancy in the market, you see enough opportunities to lend in this market, and in all fairness, you expect sort of the growth part to continue in the second half, correct?
Sure.
Yes.
Okay. Yeah. Next question would be with regards to your sort of loan book split. If I look at your loan book split, I think it's 60-40, where 60 is corporate and 40 is retail. Is that strategy sort of something you're going to continue going forward? Do you see that changing or evolving? If you just give us some flavor to that, because we've seen a 50 million real growth in the first half. If you could just give us some flavor as to has it been proportionate between retail and corporate? Has it been geared more towards corporate? If you just give us some insights.
Yeah, so
Mission, if you allow, I will answer the question. Since you know that most of the banks and even leasing company, they used to focus on corporate finance, which basically, as you know, it has high return because of the volume. After the COVID, I think most of the, say, leasing companies, specifically us, we are basically, our strategy is to focus more into small tickets, but with, of course, being also quantitative and quantitative at the same time. But we need to focus into retail and SME rather than having a big tickets, which basically has a very high risk. Now, one of those strategies basically is to increase, I would say, retail and SME in a very cautious way. At the same time, we try as much as we can to reduce the volume of finance for corporate sector. And that basically will make us more secure and more safer. And we don't know what is the future risks that is hidden, but we need to be also cautious about our portfolio and the experience that we've been through in COVID-19.
Okay, and last question is, if I look at your bank borrowings, they stood at approximately 366 million for this quarter. What is the average interest you pay on your bank borrowings?
Actually, it's vary. Actually, we have very fair mix of borrowing from US dollar, and the US dollar rate is very common, and also we have Romanian real. So I think that you better crunch it yourself to get to the right number rather than put it in this form.
All right. I mean, a back of the envelope calculation tells me it's close to around 6.5% to 7%. Would that be sort of a fair reflection?
Yeah, around that.
All right, fine. Yeah, that's it from my side, gentlemen. Thank you so much, and wish you all the best.
Thank you, Bashir. Thank you very much.
Any further questions from?
Yeah, just wanted to know if you'll be uploading the PPT on your website or on MSX.
Yes, there, yes.
Yeah, the recording will be posted. Yes.
Even the recording. will be
Okay.
posted.
Okay. Thank you. Thank you.
Thank you. Any more questions from the audience?
So we have time, but we can wait for like 2 minutes and we close the session if there is no problem.
Very much for the audience and also for the MSX for giving us a chance today to discuss and this is a way forward being transparent as well, and part of the governance. So thank you very much for everyone who attended today, and we look forward for any future inquiries. We will always be here to answer the questions. With that, I thank my colleagues, my deputy CEO, my general managers, and also our deputy general manager for attending our session, and wish you all the best for the audience and the investors, and God bless you. Thank you.